Well, welcome back, ladies and gentlemen, boys and girls. My name is Jason Stapleton, and this is the Forex Market Preview. And I appreciate you guys showing up again, but I want to cut right to the chase here and make this video as concise as possible. And although I was going to start with the Euro USD today, as the email pointed out, the main focus that I wanted to do here was on the Japanese yen and showing you guys kind of a new way of looking at this. And as you guys might notice, I'm on a little different platform. I'm actually on a TD Ameritrade platform, and I'm going to show you why in just a minute, because we're going to take a look at something that the Thinkorswim platform allows us to do here. I'm looking at this on the weekly chart, so I'm on a dollar yen, the yen cross, US dollar yen cross on the weekly chart. And as you look left here, this is the structure line that we have been watching. And if you're part of a syndicate or you're part of the private client group, this is what we've been watching for, this 94.65s area, 94.70 zone, as the market's coming up into the next level of the zone. Now look down at the bottom of your screen here at the RSI. This RSI is pegged at about 98, and we've come slightly off of that down to about 97 now. But this market has just been in a straight vertical move since basically, we broke out of the structure back here about, when was this? I'm looking on this chart. I'm not all that familiar with this. About November of last year. So November of last year we broke out, and then it's just been a straight vertical move north to roughly the area that we were watching for a potential reversal zone. Now if I go down to a daily chart, you're going to look at this and you're going to see that we're starting to see divergence here on the RSI as the market approaches that zone at 95.45. Now, as I said in the email to you guys this week, one of the most difficult things about trading is identifying the potential reversal zone and actually making that call correctly, because if you just sell when it comes up into here, you risk the market rallying a little bit higher and not knowing. If you wait for the double top or the double bottom, well, that can end up crushing you, because you may get what we call a V top, where the market comes in, taps it, and then reverses. The market may come here. We may be looking for 94.65s. And it may come to 94.45s and reverse on a dime. We are looking at like a daily chart here. We're looking at a rather high time frame for a potential reversal. So the question becomes, well, how do I take advantage of this, and how do I find the most optimal way, especially if I have very limited funds? Maybe I'm in a position where, hey, I chose the currency markets because I knew I would be able to learn the skill of trading without having to put up $15,000, $25,000, $100,000 of capital in order to do that. So how do I take advantage, essentially? Well, what people are not often aware of is that we have ETFs in the currency markets as well. And as I blow this out, you're going to see here's the dollar-yen cross, and you can see the upward movement here on the, let me just blow back out to the weekly chart here so we've got a good representation. So here's the dollar-yen on the weekly. This is the straight spot market, and then over here you're going to see the FXY, which is the Japanese yen trust ETF. And what you see is they're inversely correlated. So where this is dollar, if you're imagining as dollar yen, this is yen dollar. So you're seeing an inversely correlated. As the market rallies here, you're seeing the drop off here, and it's just an inversion. Now the price points are a little bit different. We're looking at 93.50s here, and we're looking at 104.80s over here. But that doesn't make any difference. That's not the important part. What you're seeing is RSIs are doing roughly the same thing, and directional movement, because this ETF closely mirrors what we're seeing in the actual spot market of the currency. So let's say you've got that small account. You're trying to figure out, well, I'm not really sure what to do. One of the other options that you can have when you're using a platform such as this one is you can roll over and you can look at trading an option. You can trade an option on this ETF. So if I look at the ETF and I say, okay, I know that based on this, I'm looking for, this is a very good place where the market is highly likely to catch a pop here, but I'm not real sure where it's going to pop. I don't know if it's going to pop here or whether it's going to pop, 50 points lower. I don't want to get into a position where I don't really know where I'm going to have my stops, or to be in a currency spot market where, hey, maybe I really can't afford the risk that's out there in that. So what I'm going to do is I'm just going to bounce over to my options chain here. And I'm going to look at, I'm not going to get real detailed into this because it's not really that important, but if you'll remember back on the market here, we're sitting right now at about 105s, roughly. Okay, and I'm going to give you just one simple strategy here that you can use. You can roll over to an option and you can look at, we're looking at the March 13 calls, and so basically these will come due on March 13th, and today is in fact Sunday the, I don't know what, who knows, it's roughly a month away, give or take. Okay, so these options will expire in about a month, and I'm going to look at those 105s because basically the even number, and I can look at buying an option. Now I'm buying 100 shares at roughly $1.45 a share. So it costs me about $145 to buy one of these. And if the market rallies as we think it's going to on the currency on this currency pair, and we get a very swift pop out of this zone, which is what we would expect. We would expect over the next couple of days to see a reversal here and a pop out of this market. If that happens, and we get that pop over the next couple of days that we would expect to get out of this rally, we get a rally from say 105s to 107s or 108s, we get a nice little pop out of this market, we're going to stand to make a very good return because our options will become more valuable. There's a chance to make 50, 60, 90, 100, 300% on our investment of $145. Now, if we're wrong, there are a couple of things that can happen. Number one is we can exit the option for roughly what we paid minus a little bit of decay, or we may be able to get out for basically what we paid if the market just gives us a little bit of a pop but we don't see any follow through on it. We may be able to get out of the option for roughly what we had into it. And the third thing is our risk is very limited. So if, for example, the market continues to go lower, 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 and it comes all the way down into 102s, where normally we'd be stopped out because looking left we can see where that support level is here, and we normally would have been stopped out at 102s or 104.60s, and that happens in the next couple of days, and then we see, man, a huge spike. So the market came through. Everybody talks about getting stopped out, right? Somebody was out there stop hunting. Well, when you use an options-based strategy or you're using options in your trading, you don't have to worry about being stopped out because you're only risking what you've put into the options. So you can never lose more than what you've invested. And so if the market drops down into 102s and in the first couple of days of trading next week, and then we see this massive spike of a rally that sometimes we see in these types of things, and this is on a weekly chart, so I'm making roll with me here on the concept, okay? If the market drops down and then we see this nice little pop over the course of the next week or two, we could stand to see some very, very nice returns out of this and still not have to worry about using up any stop loss. And you can do the same thing by dropping down to a daily chart and looking at the daily. As you can see this nice consolidation in here. Look at this volume spike. One of the nice things about the ETF is we can also see volume. You can see the volume spike. You can see the bullish divergence that exists here all the way along this falling line. And now the market appears to, cross your fingers, be channeling up here. And we happen to know, based on our study of technical analysis, that this is happening right near that structure resistance level. Look left, structure leaves clues. And so this is just another way. And if this is confusing to you because you're fairly new to it, then ignore everything I just said and just, basically look at, we've got a potential reversal area right here where we're at right now between 94.60s and 9500s, basically. And the market is certainly showing some signs of exhaustion, and we will probably see some degree of correction here within the next week or so. That would be my best, most educated guess. But for those of you who are a little bit more experienced, who've been doing this for a little bit longer, who are looking for some different ways to come at the currency markets when you see something setting up, but maybe you don't have the capital, or you don't have the time, or you don't have the expertise, so to speak, to come in on a purely technical play, this is another way for you to come at it. And so I hope this was helpful for you in analyzing this potential and giving you multiple ways of looking at the same possible outcome. Let's hop over now and look at the Euro USD, and I have identified here, just showing you this structure. Okay, we're out on the weekly chart here. Let's go down to a daily chart. How this structure plays a key effect in making our trading decisions. Look at the support level back here. Okay, support level comes up. Boom, we find it. It holds. We find it again. It holds. We come down. It holds again. We finally get above it. We come back down in to test. Where do we test? We test right along that same ridge line. Market then rallies up. We come back down in. Where do we find support? Right along that previous ridge line. Now we take a look 1 degree farther. We scroll a little bit left. The market has rallied up again. And now we're coming down, and we're potentially going to retest 132.80s. 132.80s being previous structure support, which may now become resistance down on the 4-hour chart now. Now we have some potential options. Now we can start taking our Fibonacci tools, and we can start bringing in our Fibonacci extensions, and let's see what we've got here. From the high water mark to the low water mark before the retracement, we've got roughly a 127 extension right in there at 132.57s. We can also come from the most recent swing high to swing low and back down in, and we can see, yes, that does in fact line up right back on that 127 extension. So right in this zone, if we're gonna carve out a zone here, let me just see if I can grab a tool. Let's grab a rectangle tool. If we're going to carve out a zone here, let's just assume that this zone is going to come in somewhere around this 127 extension, all the way down and through these lows at around 132.33s. This is going to be an area where we could see a potential reversal. Let's go ahead and grab a Fibonacci retracement, and let's go from the low here on the left, the sore thumb low to sore thumb high. And we're also going to see right in that same zone is this 618 retracement. Now, I'm going to go ahead and delete my box here because it's hot pink and it's probably hurting everyone's eyes. And grab the right tool here. And you'll be able to see where all of this lines up. The 127 extension, the 1414, the 618 retracement, and the structure. See how all of that is lining up right in this area. And again, just as we talked about before, what are my options here? Where would I want to look at entering this? Maybe I don't know where the market's going to stop on a dime here. Maybe I want to go to the FXE. And I want to come over here and I want to say, okay, let's look at the FXE. And I'm going to come down to the 4-hour chart. And I'm going to take a look at, now guys, look at this. Again, this is a lot cleaner. A lot easier to see the price action than looking at this broken ETF here as we bounce around and bounce around. But you're going to see that many of the same movements in here are exactly the same. And so as we look at this, could we potentially buy some calls around 132.71s? Absolutely we could. We could buy some calls right in here around this support level. This could be 131.71s for potential buying opportunities, and grab those calls. It's just another way of looking at the market if you want to explore that. And there are a ton of different ways that you can do this. And what I wanted to do with this Forex market preview is not only show you some reversal areas, but also key you in on some additional ways to trade it. So that's just basically two of the things that I wanted to cover with you today. The last thing I want to tell you about before you go is what's happening next week. Emails are going out next week for the Technical Trader Workshop. Now, this is not to be confused with the Technical Trader Summit, which some of you are doing to come to Kansas City, but we decided in order to make it very confusing that we would call this the Technical Trader Workshop. And what it is it's a 1-week online event hosted by yours truly and Akil Stokes. Akil runs the ratio trading room for us, is a phenomenal ratio trader, and is going to be in the room with me co-hosting the event. And it is a solid week of nothing but education on what you see here every week in the Forex Market Preview. If you have attended one of these in the past, I do them typically once or twice a year. And it is, by accounts of those who come, it has become a turning point in a lot of traders' trading careers. It has become that point where that light bulb goes on. And be on the lookout for those emails to go out, because you have to register, okay? You have to register. It's not something where you can just show up. You've got to register. We've got a bunch of stuff, videos and training stuff that you're going to get prior to coming to the event so that you're well prepared for everything that we're going to be covering. So whether you've been with me for a long time and you've never been able to make an event, or if this is your first time and this is the first chance you're going to have to spend a week with us, it is nothing but pure content for an entire week. We're bringing in BJ Nash, who's going to be teaching on trading psychology. There's going to be a ton of stuff happening over the course of the next week. So emails will go out on that next week, and then plan on I believe it's the 25th through the 1st. That's the week of the Trader Workshop, the 25th through the 1st of March. And then right in behind that, of course, we have the Trader Summit. So be on the lookout for those emails so you got a chance to register for that before the event on the 25th. If you've got any questions, feel free to email me. Let me know what you think about the options deal, because it's something a little bit tricky. But I'm trying to push you in terms of your skill level. I'm trying to push you in terms of your comfort zone and challenge you as a trader. So send me a note. Let me know what you thought about it, good, bad, or indifferent, and I'll make adjustments off of that. But I hope that this was a valuable tool to you, and next week we'll be back to the same old Forex market preview that you're used to. But a little switch it up, a little change up, keeps things interesting. So until next time, guys, good luck and good trading. I'll talk to you soon.